What's going on, traders? Hope everybody had a great weekend. I wanted to do a recap for you guys for the S&P 500 Monday, February 13th. Markets ended up higher, 1.17%. Final print at 412.83. And of course, the elephant in the room, CPI tomorrow, data being released at 8:30. All the market is watching what this data comes out to be. And because we do have CPI, I wanted to go into a little bit of macro data before we ended up digging deeper into the charts, see if we can come up with any projections for tomorrow. Of course, it is a little bit tricky coming into such a big data release, but we'll do our best. And so let's pull up CPI right now. Looking at the chart, last print was 6.52%, and it looks like from most of the major banks the consensus is coming in around 6.2%, with Wells Fargo, Morgan Stanley, JP Morgan, Credit Suisse all coming in with that number as their estimate. Bank of America slightly lower, not by much, just 6.1. The highest one I'm seeing is 6.7. But as I said before, the general consensus 6.2%. So hopefully if that comes in, be a little bit lower, and that might give the markets a reason to go higher. One thing I wanted to point out was the labor market here. You can see that we did have a bit of spike in claims, and that is what the Fed wants to be looking for. They want to see labor market weakness, as that can help to bring down inflation. And they've said it many times that they want a tighter labor market. So we did have a rise in that, which is a good sign for the Fed that their policies are working. One thing I want to also get into from a macro perspective is the yield curve here. And this would be a little bit more of an unsettling type of data to look at. But yield curve still inverted here. And what we really want to be looking at is not really how deep, how far down this goes, but how steep it goes down. Now, something I want to mention with this macro data, it takes a much longer time to play out. We don't take short-term trades by any stretch of the imagination off of macro data. This can take years, a year, 6 months, 7 months. I'm not really sure, but this is a great leading indicator for things to potentially come. And I want to show you guys what happened here when we had such a steep decrease right before 1999, where we had a brief recession. You can see how steep this came down, and then boom, this went up, shot higher, and this was a bit of a recession time for the United States. What happened here in the dot-com bubble, starting at the end of March in the 2000s? Boom, again, we entered in a recession here. What happened right before the last Great Recession, 2008? The signals were there. Look at this drop coming down, 2008, inverted. And what happened starting here? We started to tick higher, and the housing crisis hit. And of course, this blasts off. And you know what happened in 2008 to equity markets and the economy, generally speaking, around the world, and of course in the United States. So here we are again in the same situation, where we're getting these serious readings of inversion and steepening in that curve. Here again, you can see what happened every time afterwards. Recession all through this period, recession and recession. So this here would be a warning sign that we could have more trouble ahead as far as the US economy is concerned. All right, guys, let's get into the charts. Of course, the charts may tell a different story, but we'll have to see what the print says, of course. Now, we were talking about this nice bull flag forming on the market, and today we came in the lows on Thursday, tapping the bottom of this trend line, nearly kissing the 20-day moving average that we were watching right off that 404 area. I think it came down 404, it didn't exactly touch it on Friday. I think we got 405 was the low, yeah. But either way, we were looking at that, came in, nice push. Today we closed above the 9 again, came right back to the top of this flag. Now, what a thing of beauty here. Of course, we've got CPI data just to mess up such a nice setup. Either way, we started to top out here at this flag breakout. So, depending, of course, what the data comes in, we could be pulling back here and continue in this flag type of pattern for a little bit longer, or it could be the catalyst that's going to push us up higher. Again, we've been talking about that 420 being a possibility for a short-term long target, so I'm still eyeing that level as well. But it's also, of course, it's going to depend if we break out of this flag pattern and then get over these highs as well. Once we get over these highs from a few days ago, February 2nd, and then I'd be pretty confident saying we'd see that 420. So let's look in today's price action. Again, we were mentioning a beautiful trend day today. If this thing would load. Okay, perfect. And let me go into the 5-minute and make it a little bit easier because we had multiple setups today. Now, I was watching personally the 409.55 or 45 area. I was watching that. We had beautiful relative strength in Microsoft in the morning, helping to push up the markets. But once we got over that 409.45, I started getting more in that bullish bias here. We had a bit of a flag here start to form. We came in kind of muted, but that nice impulse candle first started us off, igniting this nice rally that we had. Then we had this beautiful move up. Another flag started to form here, right under, even if you were on the 5-minute, which I don't trade off of, but beautiful pull in right here to the 9 again, breakout. Again, another flag, breakout. This one gave us a little bit more selling pressure, but bulls certainly came back in with the nice aggressive push up higher. Then we entered a bit of consolidation, here in this zone. It was, I actually initiated, I was playing Microsoft through all this, so I actually didn't participate, but I did participate when we had come down here, back down to this 411 area. As you can see, potential double bottom, and I was watching this. I believe we also had a 30-minute imbalance in this area, a gap, so I took a long on ES here. I was targeting even around I think it was 1 o'clock or so. I kept on calling for 413, and unfortunately we didn't get it in trading hours. I got in here on ES, but we did get it on ES. I think ES was 41.50 is what I was looking for my target, and 413 on SPY. So I did end up getting that payday, which was nice. A nice little fake out here, trapping in a little bit more bulls. But today, when I saw this starting to happen, and we've seen this before, I was talking about potentially seeing more chop, but I forgot about the possibility, and we've seen it, like I said, we've seen it before. Today we really had potentially just an exit liquidity run where they were pumping up the market and exiting while it would go up. So that way tomorrow, if we do get a bad print and we do dump, they've used all this either retail, all this buying to really get out of their positions. But I think a lot of people, a lot of bears did get trapped today because they kept trying to short this. Oh, CPI is coming out, doom and gloom, all this kind of stuff. They kept shorting, and that just really fueled the fire for us to make these highs all day and move up. So let's take a look here on the hourly. Let me delete this. Still in this flag that we're talking about here, we closed nicely on the hourly over volume point of control, sitting at 411.83. Again, with the technical analysis, the data could come out tomorrow and this thing could rocket to 420 tomorrow, or we could drop all the way down to 400. My best guess is if the CPI print comes in line or close to estimates and consensus, then it's going to really take a little bit of time for the market to kind of, or also the market and banks to kind of look over the data with kind of a finer tooth comb and get into the nitty-gritty details. That's where that's where they're going to really be looking to see what they feel like the effect that the Fed's policies are having on them. If it comes in way lower than consensus is, well, then we're going to rip. And obviously, if it comes in way higher, they're not even going to care. It's just going to tank down. But we'll have to see. That's going to be at 8:30 again, Eastern Standard Time. Some areas here. Let's get into some order blocks. Let's see if we can't see any spots that we could potentially look for dip buys if we do sell. So, okay, here we go. So yeah, if we come down to, again, this 410 area, we've talked about that being a big level. I know I was talking about that on Thursday and Friday, looking for that target of that 410, which we did get to test today, and of course broke over. But you can see that all this liquidity that is lined up with the downtrend of the flag here. So this is going to be tough, to break through. Of course, again, with data, this could mean nothing. We could just shoot right up into this liquidity zone. But all things fair, if we're not looking at that, certainly caution up above here for the longs. We could see another pullback down into anywhere from this 410, 410.30 all the way down to 408.59. We'll call it 60. So anywhere in this zone, I might consider a pickup as far as long to go with the trend and this bigger bull flag that's forming. And of course, if we come down here, anywhere from this 402 down to 404.70, 69 area, a lot of buy side liquidity here waiting to be picked up. So I'd be looking for that. If we come down here, I'd certainly consider buying here, maybe. Again, depending on the data and kind of what the overall market sentiment is tomorrow. But definitely some zones that we can watch out for potential pickups. And other than that, VIX, let's just take a quick look. Still ending up over 30, but we did cool down quite a bit. This hourly chart is pretty ugly here. Did cool down a bit. Of course, we're going to need to see that 20 break. So tomorrow, if we do rally and we see VIX below 20, watch out for the bulls to come steaming in. And if they do bring it down, depending tomorrow, if say we come down to that 19 area, that would be a potential BRB where you might want to think about trying some type of a short on SPY. If we do get down here, I would consider this 19 zone to be highly likely to see a bounce on VIX. How much of a bounce? I don't know. We'll have to see when we get there, but just something to watch out for if we come back and retest the broken trend line that we were watching here. So and we even got some moving averages down there. So that's pretty much all I wanted to go over today. It's a shame to have CPI come in on such a nice setup on the markets. I wouldn't really be buying this breakout anyway. I would wait for a pullback and try to anticipate and sell into it. Or another way, if we do break out of it, I'd be looking for us to come back and retest it, retest this downtrend of the broken flag and then go long off of that. So that is something, two other setups that I'd be watching. And of course, if this trend breaks, then I'll be looking for just the opposite of that. And look maybe, depending on the strength, 400 is still not out of the question coming in and retesting that. But like I said in closing, we really have to take technical analysis and our projections even more with a grain of salt coming into CPI data. Such big data, it can do anything, depending on the print. Hopefully we do come in line and it is a bit lower, just for everybody out there, obviously, because no one likes spending so much money on our goods to survive. But yeah, we'll have to see what happens. Momo still pretty hot here on the daily, cooling off a little bit like we were talking that it needed to, but it still has plenty of room to cool there. And here we're back inside of value, and here we're back inside of value, so not too much to report on there. Only thing I will say, value area high right around that 413.17, right around where we topped out yesterday. So let's watch that for a big level. If we can get over that, certainly probably see more upside, maybe coming into that 414.40 or even back to that 415. That wouldn't surprise me either. So we'll see. We'll a couple of scenarios. I will say, obviously, if we break this 410 level, look for some more downside, maybe back down to the value area low area, around 407.44. That's definitely possible. We're coming and filling out the profile and coming all the way back down to 404. I mean, we really don't know, but we'll see tomorrow. We'll be up at 8:30 to see what the data gives us. All right, guys, I hope you enjoyed the video. Please like and subscribe. If you agree with me, don't agree with me, whatever your opinion is, I'd love to see them in the comments. Don't be afraid to chime in. I'd love to see your opinions and certainly will reply. All right, I hope you have a great one and take care.